Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ed Carson with a breakdown of the action in today's session, September 10th, where we saw stocks mixed ahead of some big events, Ed.
Yeah, there was some mixed action, but I want to take a look at Alexix. Alexix? My brain is freezing on me.
Ticker
EXEL,
EXEL. That's
ticker
all we need.
EXEL, ticker DVA, and ticker JPM, JPMorgan and DaVita.
Sounds like a plan, Ed. We will take a look at those stocks, but first let's take a look at the major indexes. The Nasdaq today up 0.8%. The S&P 500 up a little less than 0.5% here today. The Dow in the red, closing down 0.2%, and then the Russell 2000 down about 0.1% today. So erasing some losses there. So strength in tech here today, Ed.
Yeah, there's strength in tech. I mean, some of it's Oracle, which is nicely listed, but lifted some software names, Tesla, a few other names. Let's just put it like the Nasdaq and S&P 500 are still inside days to Friday. So, I mean, they're not even regaining just the losses there.
Right.
The NASDAQ has a lot of work to do. I mean, getting up to, recouping Friday's losses would only like take a little bit, still in trouble there. A lot of key areas from the lows there, getting back to there. The S&P is right at the verge of the 50-day line. And I think that right around there, getting back above that, getting above the 21-day line, that would be important. And you can look at how there's a lot of stocks that look like the S&P 500. There's unfortunately a lot of stocks that look like the NASDAQ too. But the S&P 500, so if the S&P 500 were to make a nice move here, you could imagine a number of stocks flashing buy signals, or at least getting very close to a position. So it's a situation where you may not want to be doing too much, but at the same time, you really want to be paying attention, because you might be wanting to take action in not too distant future.
Exactly. Yeah. If we have a bullish day tomorrow, the S&P 500 would start looking decent again, I would say.
Yeah, and we do have a lot of news. We have the first presidential debate between former President Trump and Vice President Harris. It's the second debate. The last one eventually led to Biden dropping out. So a lot of big questions about taxes and tariffs and how that goes. And then tomorrow morning we have inflation reports, which have definitely some impact on maybe how large the Fed might cut rates next week.
So, Ed, you're going to be covering the debate tonight from an IBD perspective. All the focus on what investors need to know with what's to come tonight. So, thank you for covering that for us.
Yeah, it should be interesting. They have some big ideas on taxes and tariffs and whatnot. I don't know. It doesn't mean they would get what they want, but there's a lot of real big importance for investors.
So, we'll have to see what they say. Okay, let's move on and take a look at RSP. Let's see how RSP is doing. If this were a stock, Ed, and we saw a bullish day tomorrow, I think some investors would consider that a buying opportunity.
I think so, and it was interesting because there were some, financials did not have a good day, so you could have certainly understood that. Oh, okay, some of the techs are getting a bounce back, but maybe RSP is going to fall. But this held the 21-day line edging higher. A lot of it, really, the Dow did too. So there was even with some action there. We're going to take a look at JPMorgan, but some of those banks and lenders had terrible days, or not very good days. So it was encouraging that they found support at key levels.
hmm Okay. Anything, Ed, in your perspective from a sector view that we should check in on today?
Let's just quickly look at maybe USO. Crude oil really sold off. There was OPEC, which delayed a production hike a couple of days ago, last week. It tumbled. They cut their demand forecasts. There were some weak China imports, just tumbling. Lowest settlement in over a year. I think it was the lowest settlement since maybe late 2021. I mean, it was just really so that and financials are definitely some sectors that are not doing very well.
Okay, let's now take a look at, speaking of JPMorgan, and here's the daily chart. Like you said, not a good day today for financials. What happened, Ed?
Well, JP Morgan and specifically said, well, our net interest income isn't going to come in as strong as what investors had been hoping for, and so that was a part of it. There was also Goldman Sachs warned on trading, and they also had some a charge for consumer finance. That was more Goldman Sachs related. The JP Morgan news is probably not good news for other banks as well,
Mm.
because if they're not making money on net interest income, probably a lot of other banks aren't. And there was also Ally Financial, big auto lender. They talked about weaker interest
Oof.
income and some other things. So really tumbling. So this hit lenders
Mhm.
and financials. It also hit car dealers, automakers, which have big financing arms. And it's also just not a good sign for auto demand if you can if the lenders start getting a little more nervous, or maybe delinquencies pick up. So JP Morgan, again, financials were looking strong, and banks, and the financial ETF didn't look too bad because there's a lot of other things in it. XLF actually didn't have a good day, but honestly, it found support at the 21-day line because there's a lot of
Right.
other things, credit cards, insurers. But JP Morgan, it was in a buy zone and then tumbled below that, went through the 50-day line. Again, having this and Goldman come down and the Dow only being down a little bit was pretty good, but not great. So it did flash a sell signal today. You could argue that, well, it didn't close there, but I think investors who bought recently, that's a pretty significant
Mhm.
loss. If they bought anywhere near the buy point, they probably would want to be getting out, regardless. So that was,
Mhm.
looking, that volume was really amazing.
It was.
Volume. This is not, that's normally what you get on earnings days, and that was not.
Mhm.
Yeah, that was a
Right.
sell signal, I think.
So, Ed, what should investors do then? I mean, this was supposed to be an area that was holding up better than a lot of other spaces, and today it definitely a big shift here.
Well, yeah, and something that Chris Gessel, our chief content officer, often talks about is that banks go on runs, but they don't go on forever. They're a little bit like me going on a run. I'll jog for a lap or two, and then it's just like, okay, I'm going to sit out, and that's sort of how they don't haven't had a real outperformance, and so maybe this is the end of it. It's also a sign not great for the economy,
Mm.
and again. It's still holding on things. It's not like breaking long-term
Right.
trends. Maybe this is temporary. You just have to reset a little bit, but it's not like its earnings were tremendous. Okay,
Mhm.
it's not like this is, it doesn't take much, and all of a sudden its earnings will look, would be going to zero.
Sure.
So I don't think it's definitely discouraging for the banks, I would think.
Mm. Well, we'll have to see if the weakness continues or if this sector can firm up after this negative news. But definitely a change in tone here with the selling there. And then let's take a look at ticker EXEL Exelixis in the biotech space. Potentially actionable here today, Ed, with an interesting move off of that 21-day line up 3.1%.
Yeah, there's a number of stocks today that found support at the 21-day line, and this one's really nice. It's just like it broke out on earnings, really powerful, really strong earnings, and that was great. Really powerful technical move, came back down, but really held, sort of came around to the 21-day line. It really didn't lose there, held above the top of that base. So nice action here on a weekly chart. It sort of came down close to the 10-week line. I mean, didn't quite. After this week, it should have a flat base. So you could just think of this as an early entry
Hmm.
to an emerging base, or you could use it as its own by whatever reason. There was plenty of reasons why you could have bought it here, and you could argue that medicals at least have the potential to be sort of somewhat insulated from economic issues, though biotechs have not always, haven't been like safe. Hey, you can't treat them as safe havens, but it is a profitable company. Some strong growth, nice technical action here, above average
Mhm.
volume. So a lot to like about this name.
Right. But the overall market action has sort of shown us, hey, maybe now's not the time to be aggressive with new buys. So, what should investors be thinking about with new setups here when the market, it's not like we're at 80 to 100% exposure here. The market's come under pressure, and as you said, an inside day still, especially when you look at the NASDAQ. So, how do we reconcile those things?
It is difficult, but you have to market's part of our, investing pillars. It might be something nice on the table, but the table's looking a little wobbly with the market right now. So, yeah, I mean, look, if you're going to make a buy like this, you might want to take the position small, or you just have to treat it maybe more like a swing trade, at least temporarily, and think, you know what, I'm going to get out really quickly if things don't work. The 21-day line, the low of today, that might be a signal. I'm just going to get out. I mean, and so there's perfectly fine to say, you know what, I'm really going to wait. A lot of that's I did not take action today because of those reasons. But if you're going to jump in aggressively, you really have to to,
Mhm.
to be ready to jump out just as fast.
Yeah. Well said all around there, Ed. Let's round things out with a look at DaVita, DVA. Similar but muted action here in terms of this setup. You had a very gentle pullback to the 21-day line and a bounce here up 2.2% and some nice tight action around that round number of 150.
Yeah, it's been holding basically in the buy zone for several weeks now. Really hasn't, undercut that of any significant degree. 21-day line, yeah, just showing nice. Say that this is sort of a defensive growth name. Some decent growth, strong growth lately in the last few quarters. I mean, some of that I think is easy comparisons, but there's still supposed to be some solid growth through 2025. Revenue growth is smaller, but just this is something that again should be relatively safe from economic shifts. Yeah, nice upturn in the earnings line after being down for a while.
Mhm,
So that's why the stock has taken off in the last few quarters. So this would be a way it might even, depending on how it goes, you could have a 3 weeks tight pattern. It's not on track for that yet, but it's definitely doing that. So you could have bought here. You could be buying anytime in here. You could also use the top of this little area, 156. Again, do you want to buy in this market? This might be something, again, you could say, I'm going to take a small position. And if the market improves, then this might go over 156 and I can fill out my position. So there's just ways to think about it. This is one way to maybe park the money and it
mhm,
won't tank probably overnight. Uh, but easier said,
mhm.
turn around and something will happen and then it does. So show me, but it's that's again, it's very much, these are some nice setups and maybe it'll provide another opportunity if you don't do anything, if you didn't do anything with this today.
Mhm. And when we saw that early August sell-off, this was a stock that held up relatively well, which you can see in that relative strength line there.
Yeah,
So,
and you want to be looking for stocks that are showing relative strength, not necessarily acting on it, but there's definitely names that have that relative strength that are holding levels like EXEL and
mhm,
DVA that you definitely want
mhm.
to be a part of.
Okay. Well, Ed, a lot of headlines to navigate, not only in the next couple of days, but weeks and months as well. So, what do you think is the key for investors in this kind of environment?
Look, I'm the news editor, but I'll tell you, don't pay that much attention to the news. Ultimately, you want to be aware of it, and but you want to be just follow what the market does. Okay, what is the market saying? If the market regains momentum, it'll draw you back in, and that's you listen to the market. If the market, if the S&P gets turned back at the 50-day line or peaks its head above and then falls back and really sells off, that's sending a signal you might want to be even more out of the market, and entirely in cash, perhaps. So, again, just listen to the market. A lot of news events, be aware of those things, but really take your cue
Mhm.
off of what the market decides.
All right. Well, thank you, Ed. And thanks everyone for tuning in. That is it from us for today, but we'll be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all those details. We'll see you there. And then we'll also see you back here tomorrow after the close.